So 2023 has got off to a great start for markets. The Australian share market's up a staggering 7% since the start of the year in that first month. The US share market is up 5% and the tech-heavy NASDAQ is up an amazing 9% in a single month. So everyone has gone gung-ho into stocks, but as well as stocks, bonds and gold are also up at the start of the year. So there's money flooding into all sorts of different assets. In this video, I'm going to be discussing why it's happened, whether I think it will continue, and anything to be a little bit concerned about before going all in into shares in 2023. So first of all, what's caused this relief and excitement? Well, I think it's been a few factors. One of them has been actually cooling inflation, particularly in the US. So at the end of December, we've seen 5 months in a row of inflation falling in the US, and it's down now to 6.5%, which is high by recent historical standards, but certainly lower than what it was a few months prior. So people are starting to get optimistic, particularly in the US, that the Federal Reserve will not need to continue to raise rates as fast as it was in 2022, and that's giving people a bit more confidence to start investing in assets like shares and bonds again. I think that's been compounded by the opening up of China at the end of 2022 as well, and that's given a real boost to emerging markets, and particularly the Chinese share market at the start of 2023. So we've seen a few positive news pieces and a bit of positive momentum lead markets higher this year. Will it mean that markets have now seen the bottom and are only going to climb in 2023? Well, I'd probably temper that excitement with some history, because I remember very clearly from when I was investing and trading back then, after the original tech wreck in 2000 and 2001, there were quite a few rallies that felt and looked pretty similar to today's rally that ended up unwinding, and markets found new lows after that. So between 2001 and 2002, there were actually 3 market rallies in the S&P 500, the US market, of over 20% that ultimately were unwound, and new bottoms in the market went lower after that. So just because the market has a sharp rally doesn't necessarily mean we've seen the bottom of markets for 2023. Another reason to be a little bit cautious is that usually after a market bottom, you tend to see different sectors leading the market out of that compared to the sectors that led the last bull market. And what we know was between 2011 and 2021, it was really the decade of technology. The big US tech stocks were the really strong performers, and a lot of the other smaller tech businesses did pretty well. Now, tech has actually been the sector that's done the best since the start of this year. And if you look a bit deeper, some of the other companies that have performed quite well are the companies that have been shorted the most in the market. So it doesn't give me a lot of confidence based on the quality of those businesses, but also the sectors that they're part of, that we're actually in the start of the next upcycle necessarily in markets, because typically you'd see other sectors really driving the performance at the bottom of the market. And the third area I think would be a reason for a little bit of caution is that historically, whenever inflation in an economy has got over 5%, it's never been able to get under, central banks have always not been able to get it under control unless or until they've raised interest rates above inflation. So although inflation has been falling in the US and it's down to 6.5%, interest rates are still below that, and likewise in Australia with interest rates just a touch above 3%, but inflation running at closer to 8%, there's a long way to go before interest rates and inflation converge. So I think although central banks, at least in Australia, have paused a little bit to see how markets react, there may be more rate hikes to come in 2023, and this initial excitement we've seen may not last. That said, I still think it's a great time to be investing for the long run, but I would say rather than plonking all of your money into the market on one day, I think a great strategy for 2023 would be to dollar cost average money that you do have on the sidelines into markets to give you a nice average price over the year and set yourself up for great returns over the next 5 years.